While you were sleeping on Sunday night, $2.4 trillion came flooding back into the stock market. Tech stocks exploded. The Dow had its best day in a month. And it all started with 9 words on social media. If you weren't paying attention, you just missed one of the easiest trades of the year. But don't worry, because what's coming next is even bigger. Let's set the scene. Last Friday was brutal. The markets got hammered, investors were nervous. The S&P 500 took a steep dive, the Dow Jones was on a 5-day losing streak, and tech stocks were bleeding red. The culprit? Growing trade tensions between the U.S. and China were heating up again. And Wall Street does not like uncertainty. When Trump and Xi start playing hardball, markets get nervous. It's happened before, and it happened again last week. But here's where it gets interesting. Sunday night, most of us are relaxing, getting ready for the week ahead. Then, President Trump drops a post on Truth Social that says, and I quote, "Don't worry about China, it will all be fine." That's it. 9 words, no details, no policy announcements, just reassurance. And Wall Street? Wall Street went wild. Monday's session saw the S&P 500 jump more than 1%, posting its best single day since late May. The Dow crushed it with its best performance since September 11th, breaking that painful 5-day losing streak. And get this, it recovered 2/3 of Friday's losses in just one day. The tech-heavy Nasdaq, even better, up more than 2% with giants like Nvidia, AMD, and Oracle leading the charge. Now, let's talk about what's really going on here, because this isn't just about one social media post. First, the numbers. The S&P 500 clawed back more than half of Friday's decline. The Dow recovered about 67% of its losses. This is what traders call a relief rally, and it shows you just how oversold the market had become. Second, the pattern. UBS Global Wealth Management pointed out something crucial. We've seen this movie before. Trump and Xi negotiate through escalation and de-escalation. Tensions rise, markets freak out, then tactical truces happen and markets bounce back. Rinse and repeat. The current playbook? Trade disputes over rare earth minerals versus shipping fees. These are the bargaining chips on the table. But here's what investors need to understand. This volatility isn't going away. UBS expects increased market swings through the end of the month. That means opportunity for some, but danger for others. So, what does this mean for your money? Number 1, don't panic sell during drawdowns. Look at what happened. Investors who sold Friday's dip missed Monday's massive rebound. Emotion is the enemy of returns. Number 2, trade policy is the driver of markets right now. You need to be paying attention to US-China relations. Subscribe to this channel because I'll be covering every major development. Number 3, volatility creates opportunity. If you have cash on the sidelines and a long-term strategy, these swings can work in your favor, but you need to be strategic, not reactive. Number 4, watch earnings season. JP Morgan Chase and Goldman Sachs are reporting this Tuesday. Bank earnings will give us a real look at the health of the economy beyond the trade headline noise. Here's the bottom line. The market proved once again that it can reverse on a dime. We went from doom and gloom to euphoria in less than 48 hours. That tells you 2 things. 1, sentiment is fragile right now. We're trading on headlines, not fundamentals. 2, there's still underlying strength in this market. Tech stocks bounced hard. That's a sign that institutional investors see value, even with the uncertainty. But don't get complacent. The next tweet, the next tariff announcement, the next trade development could send us right back down. So here's what I want you to do. First, drop a comment below. Did you buy the Friday dip, or did you sit on the sidelines? I want to hear your strategy. Second, if you found this breakdown valuable, smash that like button and subscribe. We're living through one of the most volatile periods in market history, and you need to stay informed. Third, check out my video on trade war investing strategies, linked in the cards above. It's more relevant now than ever. Thanks for watching, and remember, in volatile markets, knowledge is your biggest advantage. I'll see you in the next one.